markets across are taking a hit, or it's being kicked down just with words. So this handsome human being just came out today and is giving you the information that whatever happens to the economy, they don't actually care. They're going to focus on pushing the inflation down to 2%. Now, what that means for the market is something like this. Now, this is stock market. Understand this. This is, the traditional low risk kind of stuff, not the wild west crypto with higher volatility, right? So across the board, you are getting this. The dollar, which was slowing down, got a relief. It's going back up, dollar becoming strong. So you need to count this in the macro scenario. Dollar strong. Fed is hiking the rate and still pointing towards another big hike because they are going to control the inflation. Fine, the emerging markets are already feeling the pain. So with a stronger dollar and a higher inflation in one of the biggest economy, this is going to go through the world. But that's words. Great. Now we are trying to read between the line and look like what are the possibilities. So when you actually go back and try to look at the reality, the inflation for June came in as 9.1, which was really high. Then we had a little bit of cool down towards 8.5 the month after that. And we are waiting for the next one in a few days. So September 10, 13, we are going to get the next CPI. Afterwards, you're going to get Fed hike coming on September 23. So before a month, when this guy comes out and gives this narrative, maybe I'm wrong on this, but I personally think okay, he's talking the market down. So that when the inflation of this month actually comes out, you actually see that, okay, it's even lower. One of the reason for that is when you go into the market, recently, when you're observing commodities, stocks, everything is dropping, right? This is the S&P 500 that's dropping so hard. And when you actually go on further, this is Dow Jones dropping fast. Now, in terms of strength, this can be okay, that's a retest after this break to the upside. That is a possibility, but we never know. If the CPI comes in hot again, we're going to break lower. But if the CPI is going to be good, meaning it's not 8.5 or anticipated like 8.32, it's 7.9 or lower. Now that's actually good for the market basically. But no one knows what the Fed is going to do. But the common sense to think is okay, for them common sense is not the common practice. They delayed start this hike and now they have to go aggressive. Now they've been doing that till this point and right now we're observing this. Fine. But on the other end, you have countries where they were the first. I think New Zealand was actually the first to start the central banks, start the rate hikes as the central bank decisions. And right now, New Zealand Central Bank may be nearing the end of its aggressive tightening cycle. As governor, they actually gives that, okay, signs of consumption is cooling down is there. But at the same time, you also get all these protests happening in New Zealand because, the job market is going down, that's going down, this is going down. So one of the safest, happiest country now is starting to get agitated. Prime rates are slowly going up. All those issues. Why? Because the central bank had to put the inflation genie back in the bottle. So what's it actually going to be in the US? How will be the stock market looking like? And moreover, what would crypto market look like if they are trying to actually pick that genie and put that back into the bottle, right? We need to actually talk through that. So if that drop in the stocks, commodities and all actually coming to the crypto market, what are we looking at? Let's try to discuss that. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. So guys, when we actually look at this market right now, it's so confusing. We are looking at different stuff. Say Ether, it's trying to break through the 20-day moving average on a 3-day chart. And that's not something really good because if it doesn't hold, we're actually coming lower. That's like 1,350. And after which it's like 1,275. Now all of these are a little closer, but still that's a red day coming in, right? When you had this low move to the upside and when you were dropping, like we were thinking, like, okay, we did a 25% drop, which is not bad. And right now we are there at the bottom. If we bounce, that's great, double bottom, but the RSI does not actually suggest that. And when we go back to the historical moves, the 37%, if you remember, we did that on one video. If we are to do that, we are coming back to retest this level, 37% to the downside. That's 1,275. Though that happens to be another support. And if that drop is literally going to be there, we may have 1 week or 10 days bad days. While we were expecting next 30 days is going to be good based on how the dollar was reacting, the Fed just comes in and says, no, we are not allowing the dollar to go back down. We want a strong dollar. They're pushing it back up. So what we are observing here is whether we will break through. If we do, that means markets are again going to slow down. So you take another step back and ask, like, okay, how much room do we have? If the dollar is going up, how high can we go? Okay, right now we're coming back up 108.83. So if we go up, maybe close to 110. Fine. And if the RSI is getting rejected here, I'll actually stay on what I think. Like, okay, this is a bearish divergence which we observe. It's consistently putting in lower highs. So for that, we have to get one more rejection here. And I think that's not too far. This right now is a weekly candle. So when you actually look at this, clearly, okay, right now we are at the end of the week. They just came in and, put that steer. So we'll have to see how we are going to close. And the next 1 week is going to be so important for almost all the markets to see, like, are we going to drop like a stone till this support and bounce? Or are we going to drop below this? Fine. So now you go back to the crypto market and look at, like, okay, this is like a little bit zoomed in view. If you actually want to look at the market in macro, you now go on a weekly or monthly chart to see, like, okay, what really is happening. Then you're like, okay, the price bounced, we went up towards testing the moving average, 20-day moving average. We hit that level, even though we had all this level as support resistance zone, and we were trying so hard to manage to stay inside there. The Fed just came in and like, no, we are not allowing you to do that. They are pushing the price back down. So as we come back down, now on a short term, this is your key range. But I would actually argue that the psychological level for Ether stays somewhere close to 1400 because it happens to be the closest area of close, weekly close for Ether. Now, that being said, if you go on the monthly close, now that come all the way back down somewhere close to 1,150. So that means you still have room for more pain on a macro if Fed is going to take the stance, and followed by that, the next CPI is going to hurt you. Now, in the CPI, if you break it down, you have core CPI and the normal overall, right? So if the core is going to be really staying somewhere close without dropping much, that can still be pushing the Fed to say, like, no, we have to actually put in more pressure on the market. So we'll have to see how that works. Now, if we stay on a monthly and then jump on to Bitcoin, then to XRP, what are we looking at? Right now, the pressure on a monthly, like 1, 2, 3, really red, meaning so bad down, and then a little bit of breathing room, and then again, you're following it up. You are going to come back down. How low? That's a big question there. The lowest we have put in recently is here, which is around 18K, just below that. But the all-time highs in terms of the monthly close comes all the way back down to 15K. With this Fed doing this kind of verbal war on the market, now there is like two possibilities. One of which is that, okay, they actually put the market in so much pressure using the words and agitate the market in a way that they think, okay, the market is going to actually take a hit, cool down, slow down, and then they may not actually have to go for a 75 basis point hike. Now, looking at the last CPI, for me, I was like, no, they're not actually going to look at 75 basis point hike from here. Why would they do that? If it makes sense to you, because if we actually go on to the macro market and look at like, okay, what's the oil doing? And they're like, okay, the oil is slowly bouncing. So we need to kill the demand to push the price of oil, including everything else, to the downside. Because on the other hand, when you're looking at oil, say this is just a daily, right? This is just a daily. You're breaking higher, you're coming back, bouncing. That's not a good sign. Meaning oil can go back up, that's going to hurt the economy. Now, not the next day. The oil prices comes in a little bit lagging. But for me, if I'm looking at this on a weekly, I would say like, okay, this is the area which you broke. Fine. Unless you break above this range, I would say somewhere close to 98, you are still in that zone. So if you put that into perspective, the RSI is actually moving down, the strength is low, and you're still inside this range. So you can get rejected at this level. You come back up, get rejected. That's a huge possibility for oil, which means if you are staying here and getting rejected by this level of 98, again, it's going to give some more breathing room. Fine. But I'm not actually saying that that breathing room can solve everything. Because now that the focus is too much on the inflation and recession, I was personally thinking like, okay, inflation is there, but the thought process is moving towards a recession because we are seeing a lot of cool down. Right now, again, I repeat, the job market is still holding on, but once that drops, the demand is done. But that's for Fed. Demand is done. Think about the common man. The job going down, the job market going down with the inflation at 7-8%. That's not gonna work for most of us. So now when you're in the market and you're asking this question like, should I liquidate everything? That won't be the wisest thing to do once you hold this position till this long. So if you are held through this and you are going to retest the market at a double bottom possibility, which most likely is going to be 20K, say 19K, because if you put the support level on a 3-day or a weekly saying like this, and the price comes lower like this, imagine the price was expected to stay close to 35, 36, and it comes to 33. It's not that great on a short term. But then what happens when the candle closes, it goes up. So if that happens here, staying close to 19, 20,000, that is actually a good deal because it can actually give you more room to buy if you want to, and that kind of pushes Bitcoin towards another 25% drop inside this long capitulation range. So if that happens, that's a double bottom. That's a great sign for the market. But again, when you go on a weekly, you are looking at an area where you need a breakout in the strength index, meaning you need the market to bring back more strength for this war, because the war right now is with words as of now. Whether it will go on as an execution for rates, we'll have to see. But now when you actually jump on the market, there's a lot of different stuff. Right, on one end, which is so bad, it was happening in Sri Lanka, was happening in Panama, a lot of different areas. It do look really sad for those people. Like, they can't afford food, they have family, all those stuff. So they are so much in frustration, they don't know what to do. And they're doing this. And on the other side, when you are looking at this, they're like, okay, the consumption is slowing down. So one, is it the consumption slowing down or they can't afford it? It's two different perspectives. The central bankers are like, okay, the consumption is going down. Common man is like, I can't afford bread or milk for my family. Right? That's an entirely different narrative. Fine. So those who are holding XRP, this really is interesting. Is it a glitch? I don't know. DI puts that as a question. Then we go on and see like, okay, this is actually coming out from digital perspective. Guys, like, that's 342. So it's not like a hike going up and coming back all the way down. It stays there for some time, right? And then you actually see like, okay, this really is something big, right? You actually see like the market showing you the major players for cross-border payments, and they put in perspective like it's Ripple and still are. And Ripple right now is not focusing just on the Ripple net, as we know, because they are right now pushing the on-demand liquidity with all their might. So now look at how many of these banks are they? It's Deutsche Bank, it's Santander, it's like, BNP, it's Bank of America. You see all of these big guys there who has already tried RippleNet, and most likely maybe on demand liquidity. Now that's just my speculation, because if they're already there and they know these guys are actually kicking them out of this space because they can't compete. Brick and mortar banks can never compete against this technology. Imagine something before internet and after internet. How did the internet based companies kick them out, right? So they need to either partner with them or acquire them. Ripple is now not the small company which you can easily acquire. Now, if you want to, you can do. There are $1 trillion companies out there, but I don't think it's going to work. Then you are looking like, okay, independently owned, it's AN Group, quotation, AND Group. Then you see Visa, Payoneer, and all others, which are like, I would say like fintech platforms, non-banks or fintechs, financial technologies, MoneyGram, Visa, TransferWise, all these companies out there. But still, if you look at these, you're like, okay, these companies are relying on this particular technology to take advantage of this new technology. Fine. So when you see these glitches, maybe it's just a glitch. But understand, one day we are going to go through that and say that was not a glitch. Or at least at that point, maybe 5 years, maybe 10 years. No one knows. But big numbers actually coming. But the issue is, right now the market, these guys say, okay, the consumption is going down. But the reality is common man cannot afford their food. So for them, it's pushing the consumption down. For them, it's like, okay, taking back our credibility. But they were really slow. Now, I don't know what you think about this. You can let me know about what you really think about the central bank in your country in the comment section below. But what I think here, yes, I agree. New Zealand was one of the first central bank to start hiking the rate, saying, okay, inflation may actually go out of hand. But even in that country right now, you see some agitation going on. So imagine the other countries where they did not hike the rate for a long time, the inflation was going through the roof, and then all of a sudden they decide like, okay, I woke up, let me hike the rate, right? That happens. And right now people are going to pay the price because they actually put this, for this guy to come out and say, even though consumers and businesses will feel economic pain, we are going to kick the inflation down. That really is something bad. So if you are in the markets right now, understand it's going to be volatile. And if you're going to touch 20K and bounce, that's great news. But if you go down to 19, don't panic. If you go down to 18, don't panic. Because we've been there. We have visited those range. What we have to see is whether the dollar slows down by 110. If it breaks this one, that's going to be bad. But again, if the CPI is lower, the market anticipates Fed doesn't have to go hawkish, they can slow down, the dollar will slow down. So for that, you now go like, okay, you can look at different structure here. You can go look at, say, USD CAD, you can go look at USD INR, whichever currency you like to actually check this. And you go on a macro perspective to actually see like, okay, what really is happening. You went up, this is the first leg, you're slowing down there. So for that matter, I would say like, okay, if you are doing this consolidation here, you may come back up, and by that time, Canadian economy is feeling the pain. Fine. So that's still going to be there. And then you're looking to see like, okay, what's the strength like? We are reaching the level of resistance. So if we get rejected from here and dollar slows down, as we expect here to happen, that gives a little bit breathing room. Now we actually go to like USD INR to see like, okay, what that country is going to feel like. And right now, if you remember, we talked about this. If we are going to break through this, that still can be something like the chart in the stocks, which we saw. I think it was an Apple where, they literally had a pattern like that forming, what happens is like the price actually breaks through and then come back down and then again bounce. So I think this was a pattern which we observed in, okay, you try to break through that fake out, you come back down and then bounce. So you're still breaking this bearish pattern bullish. So you can literally ask the question like, how can the market be like this, so much bullish when we have all these uncertainties? Because the free money, when it comes to the market, it flows into the top. Then again, you get a smaller but another bearish signal which shows you rising wedge. And that again breaks to the downside, saying, okay, we are finally breaking, retesting, and slowing down. Now that gives the market a room to go to the downside in stocks, and that can't be pain. That can't be 50% pain when these Fed guys come out and say, okay, we are going to push the price down. If you are in the stock market, be careful, because there's going to be a lot of liquidations if you're not going to hold through. But if you're in crypto market, one benefit you have is like you have a ledger, you can move it there, you can take rest, stay outside of the market, maybe 10 days, maybe 20 days, see what the market is doing. And if it's actually bouncing back, that's just war of words. They are coming out to the market and trying to put it narrative like, okay, we are going to do this hard way. But mostly it's going to be just words. They're going to play with the words to fail the market and say, we are going to push you down. And we are already watching that here. And some central banks are understanding that, like, okay, their consumers are having the issue, the consumption is going down in a different words. So guys, if you are receiving value for your time, receiving new information, getting new understanding, please do hit that like and subscribe button. That supports the channel a lot. And if you are in the market, be careful. Don't go leveraged. Short-term volatility can actually hurt you if you are leveraged. If not, the market does its stuff. Eventually, it goes back up. Patience and discipline will take you to where you want to go. That's it, guys. I'll meet you on the next video. Bye-bye.